I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Yo, it's good to see everybody. What's up, Boozy, Brian, David? Thanks so much for coming out, everybody. I didn't even share this one on Twitter, so if you're here, welcome. Appreciate you for coming. Thank you very much. What's up, Zabi? It's good to see you guys. If you smoke them, if you got them, drink them if you got them. What do we have today? Calumet Farm, Kentucky Straight, bourbon whiskey, small batch, 14 years old. Let's go. Nice heavy pour. What's up, everybody? Cheers. God damn, I definitely recommend Calumet Farm. Let me tell you that much. Wow, that's smooth. Appreciate you, everybody. Thanks for coming out. Hello, I'm Marcel Kalinovic, Boss Blunts. Welcome to Boss Blunts Think Tank. Hanging out over here with the guys and girls in the Discord, discussing some crazy shit, including my man Peter Schiff coming out saying it's not that just high inflation isn't transitory. It's that inflation will go much higher, and there's nothing the government will do to stop it. It's finally time to pay the piper for years of monetary stimulus. It's a huge bill, as the music has been playing for a long time. God damn, we're going to be so fucking rich. It doesn't take a genius to figure out that the one and only Peter Schiff, the man, the myth, the legend, is telling us exactly what we've been talking about for months now on this channel. And thank you, everybody, for coming and sharing this information with your friends and family as well. That's the number one way you can help share this information. If you found value, drop a like, subscribe if you want, and share it with your family and friends. How bad is inflation? Oh boy, it is out of control. This is probably all news to you, but inflation rate is now at 6.2%. But if you use the calculations that they used back in 1970, right before the United States got separated from the gold standard in 1971, where the fiat was no longer exchangeable directly for cash. For gold, the fiat was no longer directly exchangeable for gold, the US dollar. The actual CPI is between 12 and 14%. So even though the newly adjusted CPI formula says we're at 6.2%, if you use what we used for decades, the real inflation numbers are at 14% plus over the last 12 months. Without a doubt. Energy, you've seen energy going up 40, 50% across the board. What do we have? This is the 1 month percent change for all CPI for urban consumers. The only last time we saw anything near this bad was 2008, right before the market crash. And it wasn't even this bad, and for not as sustained for as long either. 12-month change, again. Pretty steady here. For those of you that don't know, we entered an economic global recession in January of 2021, but the federal government of the United States and around the world has refused to accept the realities and call it for what it is, a recession, soon to be a depression, that has been artificially propped up by the usage of the reverse repurchase program between banks and the Federal Reserve in order to keep the market at all-time highs. We have only seen all-time highs 64 times, such as we have this year, 3 other times in history. That's not good news. That's for damn sure. These are the assets and liabilities of United States branches, agencies, and agencies of foreign banks. Their assets are exactly the same as their total liabilities. This is the case for the majority of global U.S. banks and foreign exchanges, but its number is still at $2.6 trillion. That's not looking so fucking hot. Let me tell you that much. Let's break it down to the 10-year bond yield. What does the 10-year bond yield look like? Not great. I'll tell you that much. United States, 1.6%. Russia, strong at 8.1%. Gee, there's no conflict of interest there, is there? No, not at all. Chinese bonds, 2.94. Canada, 1.7. And you got countries like Brazil with 11% interest on their 10-year yields. There's some insane shit happening in the world right now, and our dependence on the financial institutions to prop up the United States and Chinese economies, as well as over-leveraging in the real estate sector, has led to some very poor conditions globally. The German government bonds yield curve for 10-year government bond for Germany is negative 0.23%. Not good. But yet, they've still got a credit rating of triple fucking A. Yeah, this isn't being artificially, held up here. They're not artificially maintaining a good credit rating. Australia's 10-year government bond, 1.832%. On top of that. What is German's 3-month bonds? Negative 0.947%. And a month ago, they were negative 0.75. 6 months ago, negative 6.643. They're continuously getting worse. This number going up is not a good thing because this is showing you how much a 3-month bond all the way through a 30-year bond. So the fact that it's higher is natural because it's a longer-term bond. But a 0.09% yield on your 30-year bond, does that sound like a good way to invest your cash for 30 fucking years? Australia, same shit, 2.46% with a 0.239% 3-month yield. That's not even that bad compared to some of the rest. Let's take a look. United Kingdom, 10-year government bond, 0.964. And dropping fast. It's at their 50-year bonds are at 0.89. Wow, not even 1%. And let's not forget their 1-month bonds are at negatives. Everything's not looking too good for the United Kingdom right now. Brexit, baby. That's Brexit for you. What's up, Sergio, Corey, Backup? Thank you guys for coming out. If you guys got any questions, drop them in the chat. I'll do my best to answer them. Same thing with you guys in the Discord. Don't be shy. Elmo, you're my guy. Jump in anytime. Canada 10-year government bonds are 1.732%. It's a fucking joke, you guys. It's a fucking joke. For you to believe that these global economies are in good shape and continue to invest in blue chip stocks is got to be, in my opinion, in my non-financial advisor opinion, the dumbest fucking thing in the world, if that's what you're doing. Zany, boss, how will they pay us as there's so many naked shorts to cover? Insurance on top of insurance, and they can all go bankrupt, buddy. Don't worry, there'll be enough to pay everybody. Anyways, yeah, these Canadian bonds, even though they look a little bit stronger, the 3-month Canadian bond is 0.11%. That's not great. It's not great. This one I can just save this one here for the end here. Let's save that for the end. Let's jump straight over to the fact that Evergrande Bank, as you heard it here first, has defaulted. Even though they say that they've paid their bonds a majority of bondholders have not confirmed payment. And in the process, on November 15th, 3 money managers from UBS are leaving China due to the poor conditions. 2, it says, this article says 2, but now there's 3. 3 UBS Group AG portfolio managers are leaving after a $3 billion fund got caught up in China's high-yield bond meltdown. And we know that Chinese bonds are melting down. We've seen it with Evergrande and the real estate property development sector. You know, buy China now, and pretty soon it's going to be buy America too. You know, and goodbye Australia and goodbye Germany, because all of our real estate markets are about to tank, whether you know it or like it or not. Without a shadow of a doubt at this point. Austin McClellan asks, do I think Tether will go bankrupt? I think there's a very good chance that Tether may go bankrupt. There's a very, very good chance because Tether holds a lot of Evergrande bonds. In my opinion, they lied when they said that they don't hold any Evergrande bonds, and that will become evident very, very soon. Christian Lara, if I had to guess to put a percentage on it, do I think Adam Aaron will go to the plan Mark Cahotis has about the NFT token? Unlikely, only because I believe that AMC already has their own plan, but it doesn't mean that it's not possible. Anything's possible. This is 2021 here. You know, they don't even make Black Mirror anymore because your reality is more fucked up than anything they could imagine. Yeah, I do mean real estate's going to have new ownership because the majority of companies like BlackRock and Vanguard and Zillow are scooping up your home and your neighbor's home and have been artificially inflating property values for a long time now. And as my man Peter Schiff stated, and as it was so eloquently stated in the movie Margin Call, the music has been playing for a long time. And right now, all I hear is silence. Listen to my boy, Jay Powell, the one and only Jerome Powell.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just
Let's
print it?
restart that in case you didn't hear
We
that.
print it digitally, so we
Let's
as a central
restart that,
bank,
'cause I don't
we
think
have
you
the
heard
ability
that.
to create money.
Fair to
Say
say
it one
you
more time.
simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We printed digitally,
Fuck
so
Jay Powell.
we as a central bank, we have the ability to create money digitally, and we do that by buying Treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
But by law, Chairman Powell's Federal Reserve can only lend money that must be paid back. Congress, he believes, should spend money to expand its historic bailout.
That
Fair to say you simply flooded the system with money?
this is our problem.
Yes, we
Yes.
did. That's another way to think about it.
Yeah,
We did.
abso-fucking-lutely.
Where does it come from?
It's a goddamn dirty shame, and there's nothing that you and I can do to stop it or to change it. Nothing at all.
Next month, Bernanke announced the Fed's intent to buy
This was in
$600
2019.
billion in U.S. Treasury securities, which is supposed to have the effect of lowering rates on long-term loans for things like cars and homes. Bernanke wanted to emphasize.
Now keep in mind, this was in 2019, March of 2019. After the 2018 market crash, but before COVID.
That these are the Fed's own reserves. It's not tax money, and it doesn't add to the federal deficit.
What did you see that caused you to pull the trigger on the $600 billion at this point?
It has to do with two aspects. The first is unemployment. The other concern I should mention is that inflation is very, very low, which you think is a good thing, and normally is a good thing, but we were getting awfully close to the range where prices would actually start falling.
Falling prices lead to...
Are you guys seeing falling prices? In 2019, when they started quantitative easing, they had to do it in order to keep prices low because the economy was already in the shitter. And when COVID hit at the end of 2019 and the beginning of 2020, it was the perfect way for the government to spend and print a shitload of money. 40% of all money in existence was printed in the last year. 40% of money in the entire existence of the history of the world was printed last year by this piece of shit.
To falling wages, it lets the steam out of the economy, and you
Exactly.
start spiraling downward.
Exactly.
You were skeptical at one time of some of the things that Chair Bernanke did during the financial crisis.
So I and a number of others raised questions about quantitative easing, and I felt that was my obligation and the right thing to do. I hope I did it in a constructive way. And some years ago, I came to the view that that the risks I'd identified really didn't come to bear. So I did support the action.
He said that the risks he identified to the financial sector have not come to bear. Does it come as a surprise
That Ben was proposing
that
as
he was
chair.
talking
And,
shit about Ben Bernanke, but is now doing the exact same
the
thing?
risks I'd identified. Others raised questions about quantitative easing, and I felt that was my obligation and the right thing to do. I hope I did it in a constructive way. And
Dude, just sitting up there.
He was so obligated to say something when Bernanke was getting ready to do quantitative easing, but now it's J. Powell.
some years
all
ago,
over
I
it.
came to the view that that
happy to do it.
the risks I'd identified
But back in 2019,
really didn't come to bear. So I
fucking do
did
it.
support the actions that Ben was proposing as chair, and it's we try to learn from these things. These are some of these things that don't have a precedent, and so you've got to go through them and bring your best thinking and then learn lessons from what's happened.
Wow, that's fucked up. That's fucked up. Everything that came to bear in the 2018 market crash is the same thing that's been being pushed over since 2000, 2008.
Private
and so
hedge
on.
fund called Archegos collapsed
Oh.
last month after borrowing
does that ring a
billions
bell?
from banks to make risky bets on
Oh, say that again for
a
the people
private
in the
hedge
back.
fund called Archegos collapsed.
Come on. Citadel, stop shorting my fucking stream.
Is there anything in the economy that's flashing red?
I really don't think so, no. I think there are always risks. I mentioned the risk of the spread of COVID. We're seeing more COVID cases again.
Gee.
Many parts of the country, as you know,
How
are
convenient.
reopening with enthusiasm, and time is going to tell whether that was premature. But we do see cases moving up again, not at a high level.
COVID was the top 3 contributors to the positive movement of the United States gross domestic product for federal and state government, as well as local government and consumer spending. The artificial printing of money for the government to roll out all this medication and research was number 1. State and local increases in spending for employees and bailouts was number 2. Financial services such as banks getting $300 billion in our taxpayer money was number 3. And Americans spending trillions of dollars on used car parts and takeout was number 4.
But it's you wouldn't want to see them moving back up. You'd want to see them flat or continuing to decline. They're at much lower levels than they were in the winter. Vaccination is helping, but that's I think the main risk to the speed of the recovery.
Can the United States spend trillions on COVID relief and trillions more on infrastructure and social programs without setting a match to inflation?
We're not responsible for fiscal policy, and we're reluctant to offer advice to Congress. But we've been through times with very large fiscal deficits recently. For example, right after the global financial crisis, and inflation didn't really react to that. If you go back to the 1960s and 70s, then fiscal policy was a big driver of inflation, and deficits were. Possibly. There are a lot of theories on that, but you don't really see that now. Ultimately, can we afford to spend the money? I would say it this way. The U.S. federal budget is on an unsustainable path, meaning the debt is growing faster than the economy, and that's kind of unsustainable in the long run. That doesn't mean debt is at an unsustainable level today. It's not. We can service the debt we have. We can service the debt we're issuing, and that will remain the case for the foreseeable future. But
wait, hold on. Let's play that fucking back.
We can service the debt we're issuing, and that will remain the case for the foreseeable future.
Okay. We have $28 trillion in debt as a country. And banks, debt and liabilities are getting just as bad. Let's say this much. If we take a look here at the Federal Reserve report number H8, released every Friday at 4:30 p.m. on the federalreserve.gov website. You can check out the release dates. And I can show you that banks are increasing in revenues, but also increasing in losses at the same rate. This is November 12th, 2021 was the most recent release. There are 11 tables here, and these numbers are expressed in millions of dollars. So when you see something that's 1 million here, you have to multiply that by a million. Let's go to table 2. It's usually the table I always use. It's the one I've always used. And now, as you can see, all the other YouTubers have picked up on it as well, which I think is kind of cool. So in October of 2020, these guys, all the banks on table 2, had $20.19 trillion in assets and 22.5. Now they have 22.5 trillion in assets. The liabilities was 18.27 trillion in October 2020, and today it's 20.497 trillion. All right, now let me zoom in a little bit more here so you can see what that is with residual. That's assets minus liabilities. In October of 2020, that was 1.92 trillion. It went up slightly, kind of stayed stagnant all the way across the board. It is almost exactly the same. So currently the residual assets of these banks has gone up by $10 billion here. However, their liabilities, in order to get that $10 billion in residual assets minus liabilities, increased from 18.27 trillion to 20.497 trillion. So in order to get a gain of $10 billion, they essentially have to lose $2 trillion, $2.2 trillion. The math is right there. I mean, the numbers are right here, and there you can go visit them for yourself and add them up. Okay, if you take the amount that they have here and notice that it's 2.2 trillion higher than these liabilities, you can see here that they've got a slight difference here. This only went up by $10 billion. Actually, let's see here. Let's count these out. This would be 20 trillion. This would be 2 trillion. This would be 100 billion. That would be 10 billion. Okay, my bad. It went up by 100 billion, but they still increased their losses by 2.2 trillion. There you go. I just fixed my math. Sorry. When numbers are multiplied by millions right in front of your face, it's kind of hard to do some things in the middle of the night after a full day's work. You can do this with every single table. This is table 3. Assets, 20.17 trillion. Now 22.5 trillion. However, liabilities, 18.24 trillion in October 2020. Now 20.52 trillion. And their residuals were 1.926 trillion and is now 2.016 trillion. So it barely went up by 90 billion, I believe, if my math is correct there. And again, while you see that fact, their liabilities still increased by $2.3 trillion. This is how the numbers, the all-time highs for these banks does not make sense. And this is why the liabilities are completely fucking unsustainable. But yet you got this asshole over here saying
we can service the debt we're issuing, and that will remain the case for the foreseeable future.
That's right.
But
he said that
we'll
back
have
in
to
April.
return to a sustainable path.
He said that back in April at the same fucking time that he was telling us inflation was transitory. Inflation's not transitory. Jerome Powell, Ken Griffin, I want my fucking money. It's my money and I want it now. God damn it. What makes you so confident that this thing's actually going to squeeze? These banks are so fucking over leveraged in plays like this. Someone asked me, what makes you so confident that AMC and GME will run higher once the stock market crashes? AMC and GameStop have been shorted for so long through all of these ETFs, ISDA contracts, and everything's being hidden in through married puts in the options chain, as well as many other ways. You can see clearly if you just visualize it, because it's so hard to conceptualize without a visual aid, that the actual number of ETFs that hold these stocks like GameStop and AMC are staggering because it's one thing to hear it, it's another thing to see it. And these market makers can basically make creation units for new shares in these ETFs at any time that they want by issuing them. So they can continue to short many companies for many decades until the music stops. And that is now. Because Janet Yellen does not have the fucking money to pay because of the debt ceiling crisis. Do you understand? Even though the infrastructure bill has been passed, they still got to work on the build back bullshit plan. That's not going to fucking happen. And they've got another social spending package, and that's not going to fucking happen. On top of that, they've still got to pass raising the debt ceiling by December 3rd. And they can't fucking do that because the Republicans are not going to help. And it takes reconciliation, takes a minimum of 2 goddamn weeks. 2 fucking weeks. The MOASS is fucking imminent. The fucking MOASS is upon us right now. It fucking starts now.
Not to mention, AMC and GME, they have a negative beta of 7 to 10%. So
absolutely, the raw data that I was seeing for raw negative beta on AMC and GameStop was I think about negative 14 for AMC and negative 19 for GameStop. That was the year-to-date raw beta.
Back to reconciliation real quick. The deadline for that is November the 20th. So if it doesn't happen by this Friday, it's not going to happen.
Well, there you go. There you have it, ladies and gentlemen. From the one and only Elmo. Much appreciated, brother. That is really good information to know. If the reconciliation does not begin by the 20th, they're pretty much fucked.
The 20th is a Saturday, so yeah, pretty much.
So the 19th,
you got to remember, we looked at. Yeah. So if you remember correctly, we were talking about this earlier last week, or the latter end of last week. But I pulled up the calendar, and they were off last week, and they worked this week, and they're off next week for Thanksgiving. So they literally only have one full work week, which is this week, before December the 3rd.
So they have one work week
no
before December 3rd, but it takes 2 weeks to pass reconciliation, and they also have to pass the Build Back bullshit plan, and they also have to pass the other $1.9 trillion spending social spending package. Do you see that happening, brother?
No chance. There's no fucking way. There's not enough time.
We've been saying it since July, and they kicked the fucking can back in October. Those lucky sons of bitches got $480 billion. Old Yeller, you fucking did it. You bought yourself 2 more months. What good did it fucking do you? Did you get to secure your positions? Because the Fed now has to fucking sell off their individual stocks? Surprise, surprise. Do me a favor, if you found any value in this stream, drop a like or subscribe if you like. current daily treasury statements. Why would I ask you to drop a like? For the YouTube algorithm, so it shares it with other people. Just so you know, not for my ego. I really could care less. Couldn't care less. Pardon me. Let's take a look. November 12th, 2021 is the most recent treasury statement from the United States Treasury. Man, those 2 months went by quick, right, Joe? You're not fucking lying, dude. I remember when they shorted Toys R Us too, Sergio. I haven't forgotten. I remember when they shorted Toys R Us and Blockbuster. I miss Blockbuster, brother. I miss Toys R Us. I want to take my kids. And I can't. So they basically have two social spending packages to pass. And a reconciliation has to be done without the help of Republicans. Apparently this document's not going to open. Whatever the fuck. J. Powell, say one more time for me, man. While we're on the subject over here. How do you make this money? What's the cause of our hyperinflation?
Simply flooded the system with money.
Yes, we did. That's another way to think about it.
Oh, thank you.
We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money digitally. And
Wow,
we
that
do
must be
that
nice.
by buying treasury bills or bonds
They
or
sure
other
did.
government guaranteed securities. And that actually increases the money supply. We also print actual currency and we distribute that through the Federal Reserve banks.
But by law, Chairman Powell's Federal Reserve can only...
Shut the fuck up. Look at this. The United States spends $500 billion a month with an income of only $200 billion a month. That's a $300 billion per month deficit. That's a massive deficit. We currently have $219 billion left in the United States Treasury. Oh, sorry, is this thing not letting me zoom in? That's a bummer. Let's download it real quick. But I can see it quite clear there, just in case you can't. I apologize for that. But we don't stand a chance. All right, this is the Treasury General Account. We had, on the 12th, Friday, November 12th, we had $231 billion to begin the day. And we're down to $219 billion by the end of Friday. So we can go down to the actual tables themselves and see what they are and are not paying. And they're definitely paying the public debt cash issues. On Friday, they paid $115 billion because this number is multiplied. This number is multiplied in millions. It's rounded in millions. So we have to actually pull this up like this separately. I'll pull it up on the calculator for you so you can do it for yourself. So you have 115,713 times 1 million. So he spent, no, that can't be correct. $115 billion. This must be through today. Do you see that? Do you see this? How did they get $115 billion to spend on this when they started the day with $231 billion and ended it with $219 billion? How did they spend $115 billion? The numbers don't add up, right? Selling treasuries.
That's what we were saying earlier. How the math doesn't add up. They're very clearly hiding shit.
Selling treasuries. It's clear as day. Okay, 115,713 times a million, because this is detail rounded in millions. In one day, right? So in order for them to do that, they would have had to sell treasury bonds And who's buying these junk bonds? These 10-year bonds that are worth 1.6% for the United States. That's a hell of a gamble. That's a hell of a gamble. You know what I think? I think we're going to be fucking rich. I think I'll leave you guys with that. I don't know what else we could possibly say. Because if you watch this entire stream from beginning to end and you don't understand what the fuck's going on and why this government is most likely going to default on our debt and why the stock market and crypto markets are going to crash, I don't know what the fuck else to tell you. But I will leave you with one more thing before we fucking go. You know what? We've got another bombshell to drop for you. Keep an eye on crypto, okay? And I mean that sincerely. Keep a close fucking eye on crypto. Because the last time Bitcoin dumped in January, what happened to stocks like AMC and GameStop? AMC jumped. GameStop ran to $470 or whatever ridiculous number was, and it's going to look like chump change by the time they run the next time that they run. Bitcoin is down 7% today. So are a lot of other cryptocurrencies. And market makers and hedge funds always work day and night. They're not a 9-to-5 operation. They're out there investing, and they're bleeding money, and they're trying to make it up however the fuck they can. And they're pulling money out of places like Bitcoin, Ethereum, and all these other cryptocurrencies, every crypto you can get your hands on. There's nothing we...
But according...
Go ahead.
Sorry, brother. I was just going to say, but according to Kenny, they don't trade crypto.
According to Kenny, they don't trade crypto. Fuck you, Ken Griffin. I want my fucking money. God damn it. And I want it now. It's time.
That must be
the time
back.
Is now.
Congress, he believes, should spend money to expand its historic bailout.
Expand our historic bailout.
We also print actual currency, and we distribute that through the Federal Reserve banks.
But by law, Chairman Powell's Federal Reserve can only lend money that must be paid. Congress should spend money to expand its historic bailout.
Gensler? Yeah, let's go. I want my fucking money. I want my fucking money. Money. And I want it now. Money. I want my fucking money. Gary Gensler? I want my fucking money. Yeah, brother, pay up. Money. I want my
is very, very low, which you think is a good thing, and normally is a good thing. But we're getting awfully close to the range where prices would actually start falling.
Falling prices lead to falling wages. It lets the steam out of the economy, and you start spiraling downward.
Exactly.
You were skeptical at one time of some of the things
that's
that
what they were
Chair
predicting
Bernanke
would
did
happen now
during the financial crisis.
So I and a number of others raised questions about quantitative easing, and I felt that was my obligation, the right thing to do. I hope I did it in a constructive way.
I want my fucking money.
Some years ago, I came to the view that
Gary Gensler,
the risks I identified
my fucking money.
Really didn't come to bear. So I did support the actions that Mr. President's chair.
God for lit exchange.
And
coming soon.
It's trying to learn from these things. These are some of these things that don't have a precedent. So you've got to go through and bring your best thinking in and then learn lessons.
I want my fucking money.